Think we're good? Think we're live? Ladies and gentlemen, welcome back. What's going on today? Well, London is the epicenter of the world right now because all eyes are on the China-US talks. I don't actually know where they are, holding them in London. Does anyone know? Anyway, that's all that everyone seems to care about. Rumors about what's happening. 1 minute they are breaking for lunch, next minute they're coming back at 8 o'clock. I don't know what's going on. Anyway, the point is that everyone cares about that because that's been the market mover, and whether you care or not, other people with larger accounts and institutional capital care about that. So we don't have to be on tender hooks worried about the outcome, but whatever happens, that could drive the markets for the next few days. Whatever you trade, whether you trade in the currency pairs, whether you trade in equities, etc. Nasdaq had a little dip and then recovered, so who knows what's going to happen. Okay, before we get started, anybody here? We had last week we talked about the missing edge, and I really wanted to kind of push home the impact of specifically doing market replays and running through the trading day. I like to run through kind of this triple speed twice through the day and then go through and highlight the areas that are either executed or key areas of interest, lows, highs, swing points, momentum ignition areas, etc. Hopefully some of you guys did that. If you did, you probably went, you know what, this feels good. I like this. And so we talked about having that checklist and just building a process that you can just run time after time after time after time, because you start to know the little nuances, the little challenges, the little things that the variables that maybe you don't catch normally. Something just doesn't feel right, or something just feels perfect, and you want to kind of swing the bat a little bit more and put some more risk on the table. So we're going to follow on from that a little bit today in talking about how to design. I was pausing for a moment there because I was just thinking, where do I want to go with this? But what I really want to push home today is that, I mean, I'm not going to jump the gun here, but ultimately, guys, good trading comes from knowing yourself, having a process, and aligning it with who you are as a person. And so, not to get ahead of myself too much with the slides, that's why I was kind of pausing and going, well, don't go off piste here, Mark. It's to really build a playbook that fits you and your style. And we hear this a lot, right? And everyone says, build a playbook that fits you. But today, hopefully, I'm going to give you a process to find that, to find the thing that fits you, some questions to ask yourself, some honest questions. You've got to be honest with the answers. And really, the end of it, hopefully, you go, you know what? This is really the way I should be trading. And these are the strategies I should be deploying and the answer to why, rather than I'm just going to go down. Because here's what happens, right? I'm going to go crazy here, but here's what happens with most traders. And I've done this myself. You start out trading. I started out in 2001. You go down a path that you see. You're like, that's exciting. I'm just going to go down that path. And if you're anything like me, which you probably are, you're driven, you're focused, and you've got to grind, and push through. And actual fact, that might not be the path for you. Sometimes you have to take a step back and go, I'm going to make a little adjustment. I'm going to tweak my time frame. I'm going to tweak the way I trade. Do I trade trends? Do I trade reversals? That kind of thing. So today we're going to kind of go through that. At the end of today, or the end of this webinar, not the whole day, you'll be pleased to know. At the end of the webinar, hopefully you're going to have, or not hopefully, you will have, if you kind of stick around, you will have a process and a way to build a playbook that fits you, so you can finally answer that question. And maybe the answer is actually the playbook I've got right now is the correct. Maybe that's the right answer. But you may find actually a little adjustment needs to be made to find something that suits you. Because that's so important. Okay, so let's get started, ladies and gents. Great quote there from Dr. Steenbarger. I don't even know why is that not come up? It's missing a little section. Never mind. Successful traders don't just find a method; they find their method, one that fits their cognitive and emotional strength. And that was Dr. Steenbarger who said that. Okay, so before we get rolling, I know many of you hear this already. It won't take too long on this. Please be mindful of the risk, guys. If you're trading CFDs, spread bet product, in fact, any margin leverage based trading vehicle, things can get very, very good very, very quickly, right? If you're short, the market just tanks through the floor. Very, very nice. Thank you very much. Things are rolling in very quickly and you're making a lot of money quickly. Flips the other way, you can lose a lot of money very, very quickly. And that can cause traders to freeze, the deer in headlights syndrome. If you haven't got a stop loss in place, if you're not trading with kind of capital that you can afford to feel the swings with and happy to kind of lose, things can get unpleasant. So just be aware of the risks, understand when you're trading with leverage that things can get nasty pretty quickly. Obviously, we're trying to swing the batting average round so that we minimize the downside and maximize the upside. And that's why we use stop losses, we use position sizing, adding to trade, all the other stuff. Can't always get rid of the risk completely. Of course, that's why we have the upside, the huge potential, because we have some big downside as well. So I guess really what I'm trying to say is, please understand the risks in trading. Sometimes I hopefully I don't do this, but sometimes a lot of people will share concepts and ideas, and they can make it seem that trading is easy. It is far from easy. I promise you, from nearly 25 years as a trader, it's not an easy game to be in, right? It takes time, it takes effort, it takes discipline, it takes focus. The game changes all the time. Strategies work one day, they might not work the next month, the next quarter. You have to adjust and adapt, and it's a never-ending game. And I enjoy that, and maybe you do too. So that's part of the lore of trading. Is that so? Yeah, just be aware of that, guys. It takes work, takes effort, and there's no free lunch in trading. Okay, that out of the way. Hopefully everyone's aware of that. I know there might be some new traders here. A very quick welcome to you. I'm not going to go on. I'm going to put a slide up. My name's Mark Holstead, trading for a decent period of time. I share things with you from my experience and that I see others as well. I help other traders. I've gone up through the ranks myself. I see other traders who come up and do substantially really good work. They put in substantial numbers, do very, very well. And I also see traders who struggle. So I try and look at all of this bigger picture and put things together I think that's going to help you as a trader move forward. I'm not here to tell you how to trade. I'm not here to say I have all the answers. I absolutely don't. But hopefully I'm going to give you some ideas and thoughts you can take yourself, use those as a seed to kind of nurture and go, you know what, I like that idea. I'm going to use that, I'm going to run with that, I'm going to build that for myself. And this is what this today is all about, this playbook, building your own playbook. Okay, so the big idea, Market Wizards books. Hopefully you've all read these Market Wizards. If you haven't, I highly recommend them if you're kind of relatively new trader, developing trader, not heard of Market Wizards before. Jack Schwager has done a 7-book series, I want to say. Got a couple up there on my bookshelf. That's the new Market Wizards, hedge fund Market Wizards over there. I love them. I think they're absolutely one of the best series of books I think you can listen to as a trader. These were the real Market Wizards before people started interviewing them on podcasts and started doing that. And Jack Schwager does his due diligence, so anyone in these books will have longevity, will have a track record, will have that kind of stuff that you kind of like to see when you're listening to things. So the big idea, all the Market Wizards trade differently. Why? If you read the Market Wizards books, you just see, hang on a second, this guy trades contrarian, this guy trades with a trend. The reason is because they've doubled down on what fits them, what fit them, or what fits them now. So your job as a trader, if you're trying to become the best trader you can be, your job is to ask better questions to uncover your edge. And that's our big idea, our big thesis. So today we're going to do that. Find the questions to ask, go through that process, and then work out how you structure a playbook that fits you. Because if we believe, and I always kind of start webinars with this, if we have the hypothesis of, last week we said the hypothesis of, hey, great traders have a process, great traders review, reflect, they put the reps in, and we kind of had some evidence to support that. If our evidence is, hey, the Market Wizards are all trading very, very differently, what does that tell us about edge? It tells us there's not one edge to find and discover. It tells us there's multiple edges in the market, and our job is to find the edge that suits us. Now, we might think, well, if I can just find any edge, that's fine. But actually, you hear traders saying this as well. Why are you kind of sharing your strategy and the way you approach stuff? And people say, hey, I could put it, I can't remember where this quote was from. I could publish my rules and my trading strategy in the front page of the New York Times, and most traders still wouldn't be able to operate it or execute it, because it's very personal to you. And you might have found this as well. Like, you might be more propensity to trade on shorter term, longer term, reversals, trending. We're going to cover all that stuff, but that's our big idea today. Our big idea is to find the edge that works for you. If we believe that some of the best traders ever lived in the Market Wizards books actually are some of the best traders ever lived, find different ways to approach things. We should do that, but they found something that matches their style and their personality. Okay, so today we're going to identify your trading type. So pen and paper out. why personality, pressure, and preference matter, turning those insights and questions that we go through into a structured playbook for you. And then I wanted to add a little bit more flavor to this because I didn't want to stop there. I want to say, okay, so, and this might not make sense now, but we want to add the filters of when we're going to operate that playbook. So we don't want to kind of be trading all the time. We want to have a playbook, a way to trade that suits you. And then when do you deploy that? And then how do we keep refining that over time? So that's what we're going to do today. Okay, so I think one of the reasons, actually, you know what? We talk about this a lot. Discipline, mindset, trading psychology, all that stuff are challenges to traders. And I agree, right? It's one of the biggest things, the challenges for traders is discipline, mindset, breaking rules, not sticking to the plan, etc. But if we go upstream from that, actually, one of the reasons I believe that many traders struggle, and most probably, is because they're trying to deploy and work with a strategy, a methodology, a playbook, whatever you want to call it, that really doesn't suit them. And you might be saying, well, Mark, how do I know? We're going to figure that out in a moment. But this might be the adjustment you need to kind of move forward. And if you're brand new to trading, you kind of should experiment with different things. I'm a big fan of that. Peter's a big fan of that. He's a very experienced trader, a friend of mine as well. The experienced traders will say to you, just try some different things out. Try this, try that, try the things. But if you kind of go through and developing a little bit more, you might be in this mindset of, I'm not going to quit. I'm going to keep moving forward. I'm going to keep pressing no matter what, because that's the type of personality you are, right? It's why you're attracted to trading. And sometimes you're pushing, you're wading through treacle, you're swimming upstream or against the current, should I say, and it doesn't have to be that tough. And listen, there's no easy solution, there's no easy path. But I kind of always say this, why play the game on hard mode? If you can find something that matches your personality, your style, aligns with your strengths, something I'm going to focus on in a moment, minimizes your weaknesses or kind of works around your weaknesses, then you don't have to kind of fix and repair the weaknesses so much. You can just say, this applies to my strengths, it avoids my weaknesses. I'm going to double down on what I'm good at and really kind of push that. And so many traders have the mindset of grind, push, push. I'm going to keep going. And absolutely, you must, but in the right direction. Sometimes you kind of can take an easier path through. So that's kind of what we're going to look at today. And in my last podcast or last conversation, I kind of have a podcast, and occasionally I have a special guest on, developing trader series, or I do like a solo episode where I talk about something that's on my mind. Brett Steenbarger was on. And this is an exact quote. I didn't want to go back through the transcript and scroll through, kind of scan through this. But he said this. He said, the best traders double down on their strengths, not try and fix every weakness. And I'm paraphrasing, so don't quote me specifically on that. But that was the gist. And you can go and listen to the episode yourself if you'd like. And so that really kind of supported the idea. And by the way, if you don't know who Brett Steenbarger is, he works with hedge funds, he works with proprietary trading firms, like proper in-person proprietary trading firms, trading capital. And so he's well positioned. And he was saying, listen, the best traders are doing more of what they're good at, but we need to find out what we're good at, right, before we can do that. And maybe in a position where I don't know what I'm good at. Am I good at anything? I don't seem to be getting the equity curve that I want, and that's okay. We'll sort that. But just remember this comment and idea of doubling down on your strengths. So when you start to discover strengths, the objective is to do more that align with that and less that align with the weakness. Because the traditional way of thinking with trading is this. And let me go back a slide a moment. The traditional way of trading, the traditional way of thinking in trading is this. It's a tongue twister, right? Fix the weakness. I'm struggling with this. I need to deal with this. I need to deal with this. That's fine, and I believe you do. If you're going on tilt, if you're breaking your rules, if you're doing all these things that need to be sorted, then absolutely you must go through a process, and we talk about that plenty of times, of like how to do that over time and how to get incrementally better, and drills and techniques and ways to kind of get over those challenges that must be overcome. But at the same time, there is this myth, I think, that you have to be perfect. Maybe not perfect's quite the right word there, but there's a myth that you have to do everything very, very well. And that's simply not true. Something that opened my eyes was you're reading these books and hearing these traders in the early years, kind of when the first kind of couple of market wizards were out, because these started way before I started trading. I started in 2001. I think the first one was 80 something. But by the by, these traders, these super successful traders saying, I keep making this mistake, and I'm early on the trade here and I don't hold it long enough. And you're thinking, whoa, hang on a second, that's what I'm dealing with. You're a developing trader going through the same thing, and it's sort of an epiphany goes off and goes, I don't have to crack this completely. I just have to get good at my little thing, and the other stuff, maybe is not so good. And even recently, I was listening to a interview with a hedge fund manager. I can't remember which one it was actually. It was one of the big boys, and he was saying the same type of thing. And you think, yeah, this guy's got billions of assets under management, net worth of multi-billions, and he's there saying, "Oh, yeah, I always make a mistake. I always go into this too early," or whatever it was. And you're thinking, "Geez, that's so the proof is that is doing what you're good at and not necessarily trying to fix everything." So that's worth consider putting in mind. Okay, so let's talk about discovering the type of trader you are and getting a playbook that aligns with your strengths and your weaknesses. And if we don't know what those are, we'll discuss those as well. Okay, so first port of call here is to think about your style, right? And this is a little bit, we've got some data-driven questions in a moment, but this is a little bit like go with your gut and your instinct. And actually, you know what? If you've heard me talk before, many of you have, and many of you are new here, you're welcome. If you are new here, I'm a big believer as a discretionary trader. I have to trust my judgment. I have to trust my instinct. I have to trust my feeling, and I think that's why trading is so it's never solved. It's not a scientific formula that can be solved. There's plenty of people putting huge resources in terms of capital and manpower trying to solve it. It can never be solved because I think there's a lot of kind of intuitive nature. There's a lot of personality. There's a lot of discretionary element that only the human brain can kind of process. Now, another discussion is, does that ever end at some point in the future with AI? Let's not open that can of worms, Mark. But so these questions are all how you feel about stuff, and sometimes getting yourself in a state of relaxation and letting that intuitive nature flow and asking yourself these questions and say, hey, am I more comfortable being, these are just example questions. I'll give you something in a moment, how to generate more questions that suit you. So are you more comfortable being flat at the end of the day? Do you like holding for several days? And don't just impulsively say what you think the answer is. You don't want this confirmation bias, the recency bias, to say, well, I day traded the other day and it worked very, very well. I much prefer to be day trader. Just genuinely ask yourself, the trader I want to become, the trader I'm turning into, how are they trading? Are they holding for multiple days? Are they holding for just intraday moves? And really resonate and marinate is a better word for that on the question. Do you like quick decisions or a few high conviction ones? You can see where I'm going with this. Do you prefer structure and rules or freedom and feel? Now, the reason I put this one in here is you might be like, oh, this is a bit of a trap. It is a little bit of a trap, if I'm honest, but not in the way you think it is. So we have rules and we should stick to rules as a trader, but many traders, and actually I see this with traders who are coming up through the ranks, they feel shackled by rules. Maybe this is you actually. You're like, I've been told I should stick to rules, stick to rules, stick to rules, stick to rules. And actually what that does is it really handcuffs them and they can't perform. And so I'm not talking about risk rules. They should never be broken. There's some red lines, firm rules that you should never break. But maybe you're allowed to get into that trade on the close of a candle, the break of a candle, a pullback. Maybe you can do what you like within reason and you prefer that. Or maybe you like being very, very mechanical and saying, if this does this, then that. If ATR is more than this and this does this, then that. And that's fine. Then you work within that. But here's where the questions start to really work out your true personality. If you hate being shackled by rules, listen, you're going to have to stick to some rules, right? But we can develop a strategy. You can develop a playbook that is more aligned to that. I want to be more free. I want to be more flexible without going completely gun-ho and just trading wildly and punting and shooting from the hip and having no structure whatsoever. So, these are the important questions. Because sometimes you think, well, the answer should be, I prefer being structured and stuff. But if you're truly honest with yourself, you might say, I like being flexible to be able to do what I want. Okay, well, let's work with that. So that's a good question. Do you like to anticipate moves or do you prefer to have confirmation? Again, a little bit of a trap here because we can align stuff and we can say, do you prefer to wait before the trade looks a little bit better? in your eyes, and then you can reverse engineer that. What parts of the trading day feel most you? Do you like trading the open? You get fatigued at the end of the day, and that might depend on where you are in your trading in your life as well. Early days for me in my 20s, just sitting in front of the screen from kind of 7 a.m. right the way through to 10 p.m. No problem at all, right? Now I just like gym in the mornings, try to do all this, come for the US Open, trade the Open. If it's a busy day, fine. Happy to sit here and take the opportunities. If it starts to quieten off, then I know that unless it's a really, really good trade that I've kind of been planning and looking for at the end of the day, I probably won't take it. I'm just a different part of my life. I'm just looking at things differently. So it's a very personal thing to you. And why I say that is not to say you should be thinking that, but again, just kind of highlighting that it's being honest with yourself about when you enjoy trading, when you like trading. We'll talk about the logical justification for that, but at the moment it's just you answering these questions with your instinct and your intuition. Okay, so the next thing we look at is your strength. Now, I get it, right? If your equity curve is not where you want it to be, I understand. And you might be saying, I don't know if I have any strengths, Mark. I don't know where my strengths are. But you will have strengths. They just might not be translating to positive P&L yet. And that's the way to look at it. It's like, okay, let me not use P&L as a filter for the strengths. Let me go, okay, hang on a second. What are my genuine qualities that I know I have or I believe I have that actually work in trading? So, and by the way, maybe you do have strengths that actually do, result in positive equity curve or positive equity growth. So where do you shine? Are you patient? Are you decisive? Can you be both on command? Are you very patient sitting with trades, very patient sitting back? Can you commit quickly? Do you have a good pattern recognition? Are you very analytical? Do you do a lot of journaling? You do a lot of replay stuff? Has someone told you, maybe not necessarily traders, but maybe friends, family said, very disciplined, very this, very that? Just these questions are what you're trying to do. And I gave you a few sample of questions here. I'll give you an idea of how to get more questions that are relevant to you in a moment. But you're trying to work out, again, with that focus of what's my playbook going to be? What do I like to do as a trader? How do I like to operate? Where are my strengths? Where do my strengths lie? And I promise you, by spending a little bit of time doing this task, you will be enlightened, if you like, as to where you want to push as a trader. And that's the whole objective, is to really spend some time rather than sitting in front of the screen, rather than looking at the charts and trying to find the next trade. It's like, hang on a second, there is something I can do here that is going to help me take several leaps forward and make sure that the effort that I'm focused and resources I'm putting into this is in the least what I believe is the most effective path. You never know for sure, but at least you're kind of going, I think this is my strengths. This is how I want to be as a trader. Okay, push, learn, fail, fall down, get back up. So what are your strengths? What do you think you're good at? All that type of stuff. And then your weaknesses, right? This is where you ask yourself very honestly and say, hey, where do I repeatedly sabotage myself? Where am I breaking my rules? Example might be, hey, do you know what? When the market's really, really volatile, I get sucked in, I get seduced by volatility, and it just doesn't serve me because I'm impulsive, and it's the volatility that brings out that impulsive nature. That's a weakness that you objectively say, okay, fine. And then later on, we'll say, well, how do you then mold that and avoid that? Maybe you just don't trade the open. Maybe the open's way too volatile for you. You lead the first 5 minutes out. Maybe you don't trade these specific asset classes, whatever it might be. Which setups tempt but lose money, i.e. which ones do you want to trade but often lose money? Maybe late on momentum. Maybe you like the idea of momentum, but you're just not very good at it because by the time you spot it, it's too late, etc. Emotional states leading to bad decisions. What have you tried improving but have struggled with? Now, that doesn't necessarily mean that you stop trying to improve. Absolutely not. But we want to divert the resources and effort into something that's going to move the needle. And just like the market wizards, you might say, you know what? I'm not very good at trading trends, as an example. They bring out the worst in me. I don't like buying them. I try to get better at them. I can't. Okay, maybe I'm going to become just a reversals trader. I've jumped the gun a little bit because I kind of spoiled what the next slide is, but that might be your focus. And you hear traders saying, Paul Tudor Jones said this, and I'm sure he's evolved since then. He's like, hey, I've never been able to catch the trends. I'm very good at catching the turns. I'm paraphrasing, but that was what he said. You're like, hang on a second, this guy's made a significant amount of money doing that. Do you necessarily have to trade with a trend? Everyone says trade with a trend, trade with a trend. Well, this dude went and traded reversals, turning points, and did very, very well. And some people again say I struggle to hold trades. And I'm not saying you stop trying to get better at holding trades, but maybe you're just an A to B trader. Maybe you just trade A to B and you go, hey, I'm going to try to build my experience and equity curve trading A to B trades, level to level trades. And I'm not even going to try to hold trades. It's ruining my focus. Now, again, I'm not suggesting that you do this forever, but you highlight and identify this as my weakness. I'm not very good at this. Yeah, I'm really trying to struggle with this. And so, a way around it is either you push through the wall and you keep trying, or you take a step back and you dive around it. You might find you don't even need to address this weakness. You just need to avoid it. Or you might find, hey, you know what? I probably do need to fix this weakness because it's very significant. Now we go to the more logical, analytical section, which some of you love, some of you hate, is the edge. So where do you actually have an advantage, right? Where do you actually excel as a trader? Now, again, if your equity curve is not in the direction you'd like it to be, that's okay. You will probably have spells of greatness. You've probably had spells where you've done very, very well. And I did a podcast, it got to be several months ago now, and actually one of the more popular podcasts. It was me riffing on the business model of a theme park. And I like looking at businesses. I enjoy kind of anything entrepreneurial, capitalism. Of course, I think most of us do, right? And you look at a theme park business, many theme parks close over winter because they don't get many. No one wants, especially in the UK, no one wants to ride a roller coaster when it's hammering down with rain in the dark. It's just not enjoyable. And so they close, they do maintenance repairs, cost them less. Anyway, the point is their business model, if they stayed open all year round, they'd lose money. Because they'd say, hang on a second, this is a losing business. Look at my equity curve, my expenditures outweighing my profit. But actually, and it sounds simple, but it's a simple review of saying, hey, look, spring, summer, maybe a few kind of event-driven things in the autumn, winter, Halloween, Christmas. These are the things that make the money. Well, why don't we just not trade or not open during those other seasons or other weeks or other months? And so it was a kind of the parallel of trading is, hey, you might have something there. Why I say this is maybe your equity curve is falling, maybe it's not where you want it to be, but maybe you're the theme park who's staying open all year round. And actually you look at it and go, I just need to avoid this month. I just need to avoid this type of play, this strategy, this setup, this approach, this method. And actually then it becomes a profitable year, just like the theme park just cuts off those errors. All of a sudden they're a profitable business. So I digress. So what market environments do you tend to perform best in? This can be a review and saying, listen, I like one-way streets where the market's just ripping in one direction. I like two-way markets. I like decent ATR ranges. I like whatever it might be. You might, and this is honestly, this is where we go back perhaps to last week, the review and reflect. You don't know until you dig in. You don't know. You might go, hang on a second, why have I spent most of the time trying to short this market? And actually, that's been the majority of my losses. Okay, well, I need to make sure that I'm aligning with conditions. What type of setups do you see before others? Maybe you're very good at spotting momentum ignition before it gets going. Maybe you're very good at spotting that stall in the market as reverses. Maybe you're good at spotting breakouts that kind of don't freak out on you. There's probably something you find yourself quite good at, and so this is what you kind of double down on. Where do you consistently enter with precision? In other words, where are you trading and the market's not going? You're not getting any heat on the trade. It's going right away in your direction because you'll probably be surprised that a majority of your profitable trades do that. It does depend on the type of trader you are. I appreciate this. But for many traders who are trading on the lower time frames, you probably find that the majority of the trades that work out go your way quite quickly. And so if that's a kernel of truth, then you work with that and you move forward from that. And you're obviously looking for data. So this is the data-driven approach. Okay, so now you've got your questions. We are now going to define the setups you'll trade, the time frames you're going to operate on, the filters you use, and I'll explain more on that in a moment, and the environments you'll avoid. So we're now spending some time asking the questions, and the ultimate objective of this is to define your North Star. What are you a specialist in as a trader? Not many traders do this, and I tell you, the amount of traders who I say, what's your business model? What's your elevator pitch to me? Tell me what you do as a trader, right? Like, oh, I do this, I do that. So no. You're spreading yourself too thin. What's your North Star as a trader, especially as a developing trader? Now, listen, as you get more experienced, You might have different playbooks and this, that, the other. That's fine. But to get to the point first, you have to say, hey, this is my North Star. Examples are I trade 5-minute reversals on the DAX at key levels. That's your North Star. I swing trade breakouts on the daily across tech stocks, right? I scalp NASDAQ, whatever. I've just made stuff up here. You need a creed. You need a North Star that says that every single decision you make is aligned with that, especially as a developing trader working your way through and trying to get the equity curve in the right way, or maybe your equity curve's in the right direction, you want more, want to push it harder. It's like, well, let's double down on your direction. So the questions you had before about your style, your personality, your approach, the data, that then says, okay, this is the type of trader that I like to be. The data backs up that I'm probably okay with this. Okay, fine. Now that's going to be tattooed on my, don't tattoo on your forehead, please don't. That's going to be set in stone. That's a better analogy to define your North Star. That's your, so every decision you make now pushes you in that direction. You see a little scalp on the Nasdaq? Well, no, because I'm not a scalper. I'm a trend trader that trades with this. Or hey, I see that, and so then you just become very, very good at filtering out stuff that doesn't serve you or doesn't push you in the direction you want. Because the trouble with many traders is this: there are so many directions you can go in, and you start to move in one direction, something drags you off another direction, and you apply a lot of pressure, a lot of effort, a lot of resources, time, capital, but it's spread across all these different pathways and it doesn't really go anywhere. Whereas if you have one North Star, one focus, again, you build this up through those questions, now you can apply all that force on a single point, and whatever the physics equation is of, pressure, force times area, is that what it? I can't really remember now. Gosh, what's that A-level stuff? You get much more pressure when the area is much smaller. So if you're struggling to find your North Star, if you're struggling with those questions, I gave you some examples there, try this simple prompt in ChatGPT or any other LLM you want to use. What questions should I ask myself as a trader to find my edge, style, and strengths while avoiding my weaknesses? And dig into that more. And the objective being that you're trying to get your North Star, just like the trade market wizards who say, actually, you know what? I only trade with the trends. I'm a trend trader. I add when I'm in a trend and I stay out the rest of the thing. Actually, I'm a reversal trader. I like to trade reversals, Bollinger Band type day, whatever it might be. And once you have that, then your job, when you identify that, is to just push with all the force that you've applied to trading so far on that one thing. But without that North Star, it's very difficult to know where to push. It's very difficult to know where to apply that pressure and those resources. Okay, so if you take nothing away from kind of the stuff today, maybe go away and think, what's your North Star? What is your specialism as a trader? And that can be, whatever you want it to be. It's got to be aligned with your strengths. It's got to be aligned with what you want to do as a trader, where you want to head as a trader, and maybe some data to back it up. It's like, hang on, actually, I'm quite good at trading these breakout type trades. Okay, so a playbook is not a rigid set of rules. It's, that comes down to your setups and strategies. It's a kind of a structured way that you look at the market. So once we've done all this, now, and I was cautious about adding this slide, but no, I don't pull any punches here. I'm not here to kind of fluff things up. And me disagree with me sometimes, and that's fine. As I say, I don't pretend to have all the answers, guys. Absolutely not. But I like to believe in the trade that I'm taking or the strategy that I'm taking. Like if you believe that markets are mean reverting, right? And you believe that often they stretch and they pull back, then buying a multi-day breakout is going to be very difficult for you because your belief is, I think markets mean revert. I think they stretch, they pull back, and then they go again. But I'm going to struggle to buy a multi-day breakout. And so maybe you don't trade those multi-day breakouts. Maybe you're trading exhaustion candles. On the flip side of that, maybe you believe the market's trend. Maybe you believe under certain conditions market trend, in which case you're absolutely fine buying 30-day breakouts turtle style. And so, what do you believe repeats in the markets? Pullbacks should be bought? Do you believe the market fakes out more than it breaks out? Do you believe that breakouts run on? These all can be true, and I'm not saying they're not, right? Springs, I'm talking about the Wyckoff spring, the what's it called? The liquidity grab. The kids call it liquidity grab. Wyckoff called it a spring. What do you believe occurs more often than not? And this might be a little fluffy, oh, whether you believe and stuff, but I think it's important because as a trader, I can tell you, I can give you data to back it up. Someone else can show you this massive suite of data and this, that, the other. But if you don't believe it and you say, you know what, I just can't buy a trend after it's been up 4 days in a row. But someone says, well, look, actually, I'm showing you this. If I bought it on day 5, I held it. You get my point, right? You have to have the building blocks of beliefs. Now, there might be a caveat there to say, maybe you need to adjust your feelings on the market because they're not serving you, and that's fair. You might say, hang on a second, markets do actually trend quite a bit, but it doesn't mean you have to trade them. You might say, well, I just don't like it. I just don't like it's like breakouts. Like I will only trade a breakout, and this is my personal approach on stuff, when there's a catalyst there, when we've had a trap set. I'm not just going to buy a great breakout that's grinding up through a level. It's the middle of the day. I'm just not. I just don't believe that they work out. Now, someone could show me the data they do, and I'm still not going to take it. I'm like, I just don't like it. I don't have the confidence to take it. I'm not going to hold the trade. I'm not going to do the size I want. It's never going to work. Now, will that change over time? Of course it can. But having a belief of what you think the markets do and how they operate is going to help you so much pull the trigger, so much size up, hold the trade, add to the trade, all the stuff that actually builds the edge in your playbook. So once you've got your beliefs, once you've got your style, and once you've got your approach, I like to trade reversals, I like to trade pullbacks, I like to trade fakeouts, I like to trade breakouts, whatever it might be. Now you've built that from data, you've built that from the questions, you've maybe used ChatGPT, you've got your North Star, and your North Star is, hey, I like to trade reversals on the DAX, I like to trade breakouts on the NASDAQ, whatever it is. Now you add these filters, and the filters are, okay, so if I believe that to be true, and it's aligned with my strengths, it's avoiding my weaknesses as much as possible, and I've got some data to support this. When are you going to deploy the playbook? Let's say your North Star is I'm a reversal trader on the DAX, for example. Then you're going to say to yourself, I need some filters to guide me as to when I'm going to deploy this North Star. Like I'm not going to trade reversals when we're in a multi-day range expansion after we've had data, for example, right? The higher time frame conditions have got to be X, which is we're stuck in a multi-week range, or maybe we've extended out 3 days. I'm going to take a reversal on day 3. If you're a day trader, what time of day does data have to play a factor? Is there catalyst? Is seasonality? All this type of stuff. And I appreciate this slide covers so much. I'll give you another resource actually at the end where you can go and dig into kind of specific strategies, more rule-based strategies, price action-based stuff, reversals, trend strategies, the actual into the weeds. But I wanted to keep this one broad. And so you go on your direction and develop the playbook that suits you, because you probably know the strategies, right? You can probably reel off loads of different ways of approaching the market and trade ideas and structures and strategies and setups, etc. That's probably not what's missing. What's missing is clarity, decluttering, and saying, okay, maybe I understand how to trade breakouts and training environments, but actually having gone through the process, my North Star is a reversal trader, it's A to B trader, or vice versa. Okay, so, and why I wanted to say the filters is that many traders then with their North Star say, hang on a second, I've got a North Star, it's a reversal trader in this market, it's this, that, the other. I'm just going to always trade that. But you know when to deploy your strength. You think about military, for example, they have different weapons for different environments, right? And they use the right tool for the job. Bad analogy. Let's talk about an engineer and mechanic, right? They're trying to fix a car. They know when to use a spanner. They know when to use a screwdriver. They know when to use a socket set. They know when to use a sort of short socket. You get the point. And so the idea, it's in any endeavor as well. The idea as a trader is to say, well, that's my North Star. That's what I'm a specialist at, but I'll only deploy that under these conditions. So clarity equals confidence. Working out who you are, who are you really as a trader? Where are you heading? And maybe who you are now isn't where you want to be. And that's an honest question you've got to ask yourself as well. So at the moment, I'm taking these little scalp trades, and I don't want to be doing this. I want to be looking for bigger. Okay, now your North Star is different. It's like I'm looking for multi-day breakouts on these assets: gold, crude oil, Bitcoin, silver, Nasdaq, Dow, Apple, whatever the hell it is, right? It's having that clarity of direction that you're headed, and then how would you trade that? So I'm going to trade reversals. I'm going to look for a multi-day breakout that fails, or a liquidity vacuum, a liquidity grab. I'm going to look for a pullback off to the level. That's the weeds. That's the kind of the micro, if you like. But how you're trading it, so who you are, how you're trading it, and then when to step back. And so you're just like all good traders know when to press the throttle and when to step back. You knowing this is the filters part, and saying I've got my North Star, but when do I get involved and when do I not get involved? Because that's aligning with your strengths and weaknesses. Again, your North Star is this. Well, actually, yeah, but I avoid this time of day because it's very active. Maybe it's the open, and I don't want to get sucked into stuff. I want to make sure that I'm not getting caught out in chop. I'm getting seduced by volatility. The stops are too wide, whatever it might be. Okay, and this is the real juicy stuff that will help you move forward. And it's the questions that only you can answer. And so, why I've kind of decided to do this today, and it's a bit of a funny topic. I get it, right? Fortunately, we're doing this with Pepperstone. Got to thank Pepperstone for letting me do this. They let me do what I think is valuable to you guys. So we could hear talking about how to draw support levels and resistance levels, and you know what? It's useful, but that. You probably know all the stuff. You have it's all in there. It's just decluttering and getting some clarity on how you're trading. And like we did last week, the processes and replays and stuff, this is the things that help you move forward. And so really having that North Star, building that creed, and taking that North Star and turning it into a playbook. So you've got your identity. You now build out your trading system. So what's your filters? When do you consider taking the trade? Don't trade at the open. Don't trade unless the daily is broken out. Don't trade unless we are ACR above X. You get the idea. Any filters you need or want. The structure of the trade. How are you going to take? Are you a pullback trader? Are you this? Again, aligning with your North Star. And you know this stuff already. I don't need to go over bits and pieces about the intricacies and the micro level of structure and price action, etc. But it's building that from there. Okay, risk parameters. Of course, I have to mention this. Let's remind ourselves that this game is about risk management and then pressing the throttle when other things line up. And then your checklist, your review process. Last week we talking about journaling, reviewing, reflecting, replaying, that type of stuff. Now you're acting really in alignment with how the market wizards act, right? This is now you're starting to do the things that most people aren't willing to do. You ask the average person who's in the market, what's your North Star? They're probably like, what are you on about, mate? How do you trade? And like, I trade a bit of this, I trade a bit of that. I sometimes trade reversals, I sometimes trade this. Immediately, they're not doing very well. Immediately, the man or woman who says, what, I only look for this. I trade the VWAP pullback on the DAX between 8 a.m. and 10. Oh, geez. In fact, listen to my podcast I did with Rocher. He's coming back, by the way. Many people have asked him. Rocher is a trader who talked about, he's now focused fully on trading, full-time trading. And we talked about the journey in the podcast. The point why I mention him and why I mention him quite a lot, because he only does one thing in trading. He has one market he looks at. Admittedly, he's kind of dabbling in other stuff because he's not getting as many trades at the moment, but that's by the by, it's a separate thing. He's playing with that. It's not his main trading business center. One market, one type of trade. He looks for this type of move off the open and he adds to the trade. That's it. He's been doing that for years now, right? And he's done it so well, he's become a specialist at it. And so why I mention that is being very, very specific about what you're looking for, having that North Star, having that creed, having that business model, if you want to put it that way, the elevator pitch, if you like. Imagine you as a startup, what's your elevator pitch? Just defining that and going through the process of being able to define that. And one thing I wanted to mention is, many traders have like 5 playbooks, 6 playbooks, just get one. And I understand and appreciate, and I mentioned talking about podcasts a lot. It's not, I'm not here to plug my podcast at all, guys. Okay, you listen to it, get value from it, great. If you don't, that's fine too. But why I say this is often traders are caught between getting reps in and experience and growing as a trader versus waiting for that perfect trade and taking an A+ setup. And I understand that there's a balance to be had. And so you might say, well, yeah, Mark, I like to trade trends, but I don't always come. Fine. I'm okay with you saying, okay, I've got, this is my main playbook, but I'm also, trying to get good at this. But still have your North Star, but you have something else that you're improving and working on. Now that should be, I think, small size. I think it should be limited risk. It's an experimental, maybe a sub account, separate account. You have it there, but you have your main playbook that you're monitoring your progress on. And this is something that eventually maybe you'll bring into your playbook as a secondary playbook or a tertiary playbook. Don't build 5 playbooks from scratch. Nail one, but I do understand there's that balance between reps and experience versus waiting for that perfect sweet trade that you want to wait for. Okay, so do that and then consider expanding it once it's working. Maybe you say, actually, you know what, I've got more time to do this. I'm a little bit better now at spotting these reversals. I'm actually very good at spotting the exhaustions. Okay, should that become part of my playbook? Should I have a secondary playbook? Then under these conditions, I take this. Under these conditions, I take that. But I like to say earn the right to expand. Like I say, earn the right to trade size. Many traders are trying to trade more size. Many traders are trying to size up. Earn the right. Put some numbers on the board and go, yeah, I'm going to increase. Get this playbook working, then add another and add another. So tools to help. Your daily checklist, your replay sessions. This helps you kind of build that North Star, align with your North Star. And by the way, maybe I should have said this, but actual fact, you might find that you go down this rabbit hole. Say, my North Star is I'm scalping the DAX, and you go on it, you go, you know what? That's not for me, man. But that's okay. Just back up, do it again, and push on until you go, this fits, it feels good. You know, many amount of traders I speak to who maybe haven't turned the corner yet, the equity curve is kind of just creaking back up, but they go, you know what, I feel comfortable. I like the way I trade. I like my process. I like my style. It feels good. And I go, bingo, that's the start. You've just got to get that now. You will have so much more momentum, so much more desire to do the work, the replays and stuff, because it feels right to you. And when a trader says to me this, Mark, this feels right, and the equity curve's still not turning, I know it's a matter of time before that starts to then show up in the equity curve. And lo and behold, that's almost always what happens. It feels great. Now it's working. Now it's working. I've done this. I've done that. I've done. I've adjusted this. I've done this. I work on this at the weekend. I've done this. And then you start to see the result. But until you have that focus and that North Star, very difficult to get that. Okay, daily checklist, replay sessions, talked about his last week journaling. What would I do next time? Recordings and a self-review loop. Okay, so next steps for you. Use that ChatGPT prompt. Ask yourself some of those questions. And actually, the prompt is quite good if you work with an LLM or ChatGPT or whatever to kind of build more structure out. Define your archetype. So that is, what do you believe to be true? And again, it might necessarily be true, but you might say, I believe that markets mean reverse. I believe Forex mean reverse, in which case I'm a reversal trader, I mean reverse. Or I believe when trades break out, they run for multiple months. Okay, well, fine. Align with that. Build your filters to kind of address the weaknesses of your approach and to try and deploy that approach in the right conditions. Start logging, start refining. Okay, so wrap this up. We'll take some questions in a moment. The beauty of doing this, it's not a playbook that you just download. It's not a playbook that you've copied from someone. It's something you built. And I promise you this, and you know this from other areas of life, right? If you've done it yourself, if you've built it yourself, you believe in it so much more than if someone gives it to you. Like if you've done this and you've done the work and you've worked out the questions and you've built the playbook and you're like, hey, this is the trader I am, this is the setup I take, it's my risk, and you've kind of done it from the ground up, you are so much more invested in it. Your confidence is higher when it's stagnating, or when the trade looks the trickiest trade in the world and you still pull the trigger. It's so much better if you can build it yourself. And that's the difference between kind of copying big bits and pieces here and there and actually mastering it and building it for yourself. Again, if we kind of circle back to where we were at the beginning, Market Wizards guys, those traders build setups, playbooks, approaches that they believe in. They've not copied, and there's nothing wrong with taking other bits from other traders and build. You've got to build it from your own. You've got to use it as a seed and idea and go, you know what? Because at the end of the day, guys, stuff has stood the test of time for years. Someone might say, I've got this perfect pullback trade strategy. Markets have been trending, pulling back, backfilling, and going again since the dawn of time. It's just a psychology of price discovery, right? So no one can claim any specific playbook of markets have been moving to liquidity, running through stops and ripping since the dawn of time. Wyckoff talked about it many 1920s. These people now saying, claiming 100 years later, saying it's a whatever it is grab. Well, no, it's been happening. This is just normal price discovery. So don't worry about grabbing other bits. But the point is, build it yourself. Say, I like that. I have an affinity with that. I believe markets do this. They stop hunt if that's your belief. They rose to liquidity if that's your belief. Okay, so I'm going to build a creed, a playbook, a North Star around that. Why I've added this, if you, again, contradictory slightly, I've done many webinars with Pepperstone now. Thankful to them for helping us do these, and we're able to talk about also that. If you want specific strategies, I'd rather you've got the experience, build it for yourself, right? You study the market. If you go to my website, if you go to Pepperstone YouTube channel, then there are mean reversion strategies on there, trend trading strategies. There's day trading stuff. There's trading with the tick index. There's trading the open. There's gap trading strategies. So if you need inspiration, please don't just take them. You need inspiration, and then go there and watch those, because there's some good stuff there that might help you. So that's why I kind of wanted to do that, because I know that maybe where's the strategies, Mark? We demand strategies. Pitchforks out for me. But hopefully you understand why we're kind of going through this playbook, because I want you to build it for yourself. And just by that last slide, if you build it, man, the difference in the confidence and execution is so much better. Okay, let's take a few questions. If you have any questions, ladies and gents, I'll definitely help you if I can. We are back next week. If you've got to go, I understand. We're back next week. We'll talk about kind of resetting. If you're going through stagnation, draw down how to draw a line under that, reset mentally, reset operationally, and kind of start that recovery process. Many traders, that's how they start, right? Downhill, downhill, downhill. And you've got to kind of stop the rot at some point, stagnate for a bit, and then start the equity curve back up. So we're going to talk about some of the ways to do that. That'll be the same time, 17th. Of course, it will be easy. 10 plus 7. That's an easy maths. 6 o'clock UK time. Okay, I will take some questions, ladies and gents, if you have any. Otherwise, thank you so much. Hope you've enjoyed it. Let's have a look. If you're recording, where can we watch it again later? Pepperstone handle, that's Ilian. I think I pronounced your name correctly, pal. Pepperstone handle recordings, and they should. There's a technical issue with GoToWebinar stuff, but they get a recording to you at some point. It will send it to you if you're on the list. They will send it to you. If you don't, anyone doesn't get a copy of the recording for whatever reason, if you're on my daily email list, go to tradersmastermind.com. I send an email out every day, some thoughts, some ideas, some quotes, sometimes stoic stuff I like to talk about, occasional patterns, AI things, whatever's on my mind. If you're on that list, if you reply to that list, ask for recording, Armand, who does all the inbox stuff for me, will save everybody. And then when he has access to recording, he'll send that out as well. So anybody who wants to manually request it, who hasn't got it, do that. So they can have a copy of the recording, and then we send them all out when they come, because sometimes it takes a while for processing and stuff. David Cross says force equals m times a. Thank you, David. Of course it is. My GCSE physics eludes me. I actually did engineering, believe it or not. At university, I started it, and that's when I discovered trading. And in 2001, I was in my second year of university. I loved trading so much, and I wanted to not only finish my degree, but actually decided to do my final year and split it into 2 part-time years that I could trade, because I knew that I exactly wanted to trade. Now, this was going to be my thing. So you think I remember that? Newton's second law of motion. Thank you, David. There's someone smart here. Hi, Mark. When I find something, hi, Lana. Good to see you. I haven't seen you for a while. Hope you're well. Hi, Mark. When I find something that works well, i.e. filter, criteria, market condition, I end up leaning into it too much, giving it too much weight in the thesis, and then the edge diminishes. Do you have any suggestion of how to maintain balance? So I think you're asking, Lana, is you're so committed to the trade that you maybe push it too hard, and then it ends up kind of just fizzling out. So I like to think of it like this. You assuming you have the right stop loss that accommodates noise and invalidates the thesis, right? So that's your first port of call. I know you know this, so you put your stop loss in. I think you have to be content with saying, I'm flooding myself with certainty that this trade is going to work, but if it doesn't, there's the stop loss. So you have to review the trade on its own merits, right? So you have the thesis. There's two things, isn't there? There's a thesis of direction. I think there's also the thesis of volatility expansion, but let's assume just direction. And can you structure the trade in a decent risk reward way? So can you put the stop in a decent place and is going to give you a decent reward from that? Or is the expected value good, i.e. the probability of the trade working quite high? If it's a one-to-one still, but you think it's going to work out. I think um, it's being very pragmatic and honest about that and saying, and this is actually a real day trader's curse potentially, and this is probably why you're asking this. You can be so sure the market's going to move higher, let's say, that you end up forcing the last bit of the trade, and so you're like, I think it's going to hit that level. It's absolutely going to hit that level. I'm ready to take a trade. At that point, you go, but can I structure the trade? That's the missing piece of the puzzle. And very often the answer is, damn it, I can't. I've got to put my stop there, really. And that makes that trade not really worth taking. And so often you go, I think the thesis is bang on, and you watch it, but the last piece of the puzzle is being able to structure the trade with a decent risk and a reasonable reward. And I think that being comfortable with that and saying, you know what, it's just not right, this one. And actually, you know what? And then when it goes your way, feeling good and saying, "Well, I got direction right. I just couldn't find a place to structure it." I think that helps a lot. Peter, good to see you, buddy. Something to remember with experimentation: it takes time. Time is a major element in becoming a consistent trader that most traders do not include within their journey. Yes, absolutely quite right. And actually, one of the emails I think I'm going to send out is on my ideas and thoughts I've been mulling through my mind this morning. Is exactly that, Peter. Is the desire for traders to want it quickly is probably the one thing holding you back. And I blame social media a lot for this. I did this, I did that, I made this, I made that, and so there's a desire to go, hey, I want it now. I want to do this, and I want the outlier. And actually, when traders, we both know this, Peter, we see developing traders, and you've got a couple of decades more experience than me, and you see this is that when people become more at ease and comfortable with the fact that the journey's enjoying the journey, and that's why, going through the questions of what do I like to do, what am I good at, what are my strengths, that helps you to enjoy the journey more. And you say, hey, you know what, it's going to take some time, but I might as well enjoy the damn journey while I'm doing it. If the desire is to get the riches, if you like, too quick, and you're not enjoying the setbacks and the challenges, that's when people kind of fall by the wayside. And so, as Peter says there, experimentation takes time. You've got to run experiments for a bit, see how you feel, enjoy the experiment, enjoy adjustments, enjoy doing different things a little bit differently. Fella Bala says, actually, this is another Alana. I think it's the other way around, the name Alana. Hi, Mark. Watching with my family. We all have questions, so I'll drop each question from us. A family show. I'm glad I didn't swear. Thank you for your attention. Okay. Another question here. Your process, Mark, what time frame support level will you set alerts for? 1 minute execution, 5 minute trading time frame, 50-minute levels, or daily levels? I know daily it's important, but I want to see how you build intraday ideas. Is it the 15-minute you build the idea on, and when it comes to that level, you zoom in? The thing is, here's something to consider, Alana. And this is slightly off topic for today, and maybe we'll go into this a bit more depth. But I want to mention this. A level's a level, or whatever time frame it's on. If you've got a daily level, that's going to show up on the 15. If you've got a 15-minute level, that's going to show up on the 1. Now, you go down a 1, it might not show up on the 15 because it becomes a less relevant. So the higher time frame ones will show up on the lower time frames. Now, I'm a believer that the levels should be of interest to everybody. So you've got a prior day's high, a current day's high. Everyone's watching that. That's just a fact. It's a number. The open, the close, Friday's low, the monthly high. These are the levels that I believe everyone knows about are important. The VWAP, it's an absolute level, can't be denied, and so that's where it becomes valuable. Now, when you're talking about support resistance levels, for me, I want to go slightly higher up the time frames, and I use a zone because very rarely do you get a tick. No, just pause to the tick, pause to the tick, pause to the tick. A prior level high, a prior level low. That's exactly what that number is. When it's a resistance level or support level, it's a zone. So a rectangle says, okay, a higher time frame level. This is an hourly level. This is a 15-minute level, and that is then going to be kind of going to bleed through to the intraday stuff or the 1 minute stuff. And you might say, hang on a second, we're coming up to a key level here. Do I really want to initiate a long position? No, because actually prices stalled here many times the last few days. Let me wait and see what happens. And so the idea comes from the daily. Daily is going to be the north star, or north star today. Hey, the daily's got to be the right conditions for the trade idea. If we're ranging around waiting for news and looking for breakouts, if we've kind of broken out, we're pulling back, maybe I'll then look for the lower time frame and say, hey, do I want to take a first pullback from the opening drive? Yes, because actually that aligns with my higher time frame thesis as well. And so it's kind of bringing them all together, but the priority comes from the higher time frame, and the lower time frame kind of just supports the idea for extra timing. The danger I think we have is if we operate too much on a lower time frame without taking the higher time frame into account. Some people disagree with me on that, and that's okay. For me personally, I have to think that this price is going to run on a bit of a higher time frame. Okay. Alison says, cheers, Mark. Great as usual. Thank you, Alison. CS says it's possible to get the first video recording. Yeah, I'll send a message to Armand CS. So to do that, just reply to my daily email. He's got all the recordings that we have got, and he will send those to you individually if you request those. So get my daily email list if you're not already. Any of the daily emails I send out, reply to that. Armand manages the inbox. If you reply to that and say, can I get a recording of this? He will dig it out and send it to you. I want to make sure everyone gets a copy of the stuff that I do. Alana Falabala says, if you see a flag on a 5 minute, do you wait for a 1 minute candle break to the high side to get long? It doesn't matter, Alana. It doesn't matter because it's the same thing, right? It's the price is price. All candles do is take 5 1 minutes and put it in one. And so you get a little bit more information. If price breaks on a 5, it's still breaking on a 1. If the higher the flag is 100, say, whether it's 20 1 minute candles or 4 5 minute candles, that high is still that level. It doesn't matter. And when it breaks, if that's your strategy to take a break, then it's just price you're looking at. The candle kind of doesn't matter. Now, you might have a time limit on that and say, I don't want it to flag at more than 5 minutes if it's a really aggressive move, in which case you can time that on 5 1 minutes or 1 5, but don't get too caught up in the time frame being that important. The time frame is just to show the information. The lower time frame gives you more information and breaks down some of the higher time frame candles. If that's useful to you, then go down. If it's not, then you don't need to go down. You can trade that just by looking at price. You can trade that by looking at higher time frames. And so, be careful about being very structured about the time frames to do what. You might have a higher time frame to give you a guidance, small, short, middle time frame, if you like, for the trade idea. And then timing it might be on a 1 minute if you want to, but you don't even need to. You can time off a 15 minute, breaks the high of the candle, there it goes, price goes through. I'm long, your stop might go below that 15-minute candle. So it's giving the same thing, but just gives you more information, and that might be to your detriment as well. So be careful that you don't get sucked into noise. You're like, hang on a second, there's so much noise there, and I'm getting sucked into trades in a 1 minute, and actually it's the 15 that you're trying to get resolved. Okay. Let me go to here. Thanks, Mark. Says Nuno. Nuno. I can't seem to join your free Traders Mastermind list daily. Please help. James says, go to tradersmastermind.com. Well, I think the website's working. Should be working. Big box there. Stick your name in there, pal, and you'll go into the email list. That should be absolutely fine. Okay, question to Pepperstone. I love the recordings and literally wait on Mark's playlist on the Pepperstone channel for the recordings. Thank you, Alana. Yeah, you know what they do? They eventually will come in. I think they do a month or two. They'll come in to you get the recording from GoToWebinar, and then eventually they put them on their playlist. But I appreciate that, Alana. Thank you so much. Okay, let's start answering a few more questions here. I'll try to answer all of them, guys, and I will, if I can help you, absolutely will. If I can't, I'll direct you somewhere that can. What should be the ideal margin level to keep my position safe? Specifically, I have opened long in gold, and unfortunately, I opened the position at 3,400. Size opened 0.3. I can't give you specific advice. I know what I want to. So, you're your own trader, and you approach things the same way. Jaleel, you know, take a trade, risk what you're comfortable with risking. Two ways of approaching this: risk what you're comfortable with, that's your size, and where are you coming out the trade if the trade's invalidated. If the trade is still valid and you're happy with the risk, then you're okay. If the trade is no longer, you don't think it's a long anymore, then you need to cut the trade. If the trade is hurting, then the position size is too much. So it's not specific advice on a position, because you might have a different tolerance of risk, you might have different thesis, that type of stuff. But it sounds like to me, Jaleel, that you haven't got a stop loss in place. That's a very naughty boy. Go slap on the wrist. I'm obviously jesting a bit here, but you should have a point where you come out of the trade that you think is the trade's invalidated. If it's a momentum play, you don't want it coming back too much. If you're happy, you still think gold is a long, and you're holding it for multiple weeks or whatever it might be, then fine. You might be like, okay, I've got the position on. I'm comfortable with this. My stop loss is at 300, 3,250 or whatever it might be. Maybe it's 3,000, 2,500, doesn't matter. But the important thing with every trade is that you accept the risk, you size it according to what you can afford and what you're happy with losing. No one wants to lose. I'm not going to say jump around, excitement and go, I lost, but you're okay, that's fine. And then your stop loss goes there. So, and then the ideal margin becomes, well, what's the margin to support the position, and what's the drawdown going to be if that doesn't work out? Okay, that's what I need to keep in my account. I need to have the margin to support the position. I need to allow for this drawdown and work it all out from that. Okay. Beth says, thank you so much for the comprehensive webinar, Mark. It was extremely useful. Thank you, Beth. Appreciate you as always. Dennis says, just a quick thank you once again, Mark. Always very insightful and adds value to my confidence week after week. Appreciate that, Dennis. Thank you. And by the way, I'm not reading out all these things to go, oh, I'm so pleased. I sometimes don't know what the questions. I want to also acknowledge some of the kind words and some of the feedback as well that maybe not be so kind. There's often not so kind stuff, which is fine. But I appreciate feedback. Thank you, Dennis. I'm sorry I joined late. Is there a way I can get the first pit of this, please? The first pit of the recording should go out, Callan. If it doesn't, can get it to you. Rob says, thank you, Mark. CS says, cool, thanks. Justin says, thanks, Mark. Another brilliant webinar. This has helped me loads. Oh, thank you. I'm glad, mate. I'm glad. Also currently started reading the playbook by Mike Bellafiore at SMB, which is helping me start to look at putting a playbook together. Good for you. And if you go, this is not a plug, I promise you. If you go to my website or go to Pepperstone's web playlists, on there I've got some other stuff about building a playbook with more stuff in the weeds. This is a kind of broad approach, but if you need some ideas of maybe strategies to kind of look at and adjust to suit you, they may help. Falabala says, Alana Falabala says, how many markets should you really be watching if you're intraday? One. I would say you can watch more when you've earned the right, if you like, and I say this in the nicest possible way. There's enough opportunity in one market at the moment to have multiple trades a week if you want, or almost a trade a day if you really wanted to. Maybe not a trade quite a day. But if you want to focus on the NASDAQ, you want to focus on the DAX, you want to focus on maybe some of the currency pairs are a little bit slow, and maybe kind of want to look at something else. But I'd prefer to watch one market that's active, I'm going to give up plentiful opportunities in the week, than watching multiple markets that are inactive and maybe aren't going to give the opportunities. You want to become a specialist. You want to be laser focused. Now, later on down the line, you can have more markets to look at. You can have more playbooks, but North Star, what's your North Star, Alana? I'm a Dow trader. I trade trends on the Dow. I trade opening range breakout on the FTSE. I trade whatever it might be. Find that, do the one market, prove that has efficacy there, and then add another in. And why I say that is it's so tempting to watch multiple things. Watch a bit of gold, watch a bit of silver, watch natural gas, watch this, watch that. That's fine, but it's very difficult to make progress with that because you never get in tune with stuff. Now, you might be like, oh man, this is so narrow, it feels so uncomfortable. That's good, because actually what it does, it forces you to slow things down. It forces you to say, hey, and I'm assuming you're a day trader here, I might only get a handful of trades a week on this. I might get a few trades a week. That's good. It slows you down. It looks for the good opportunities. Or if you're a super active scalper, maybe you get a couple of trades a day. But rather than trying to trade everything, you're kind of focusing on the bigger picture and the better plays for that one market, especially in the current environment. Honestly, in the current environment, the opportunities are plentiful everywhere. And so rather than spreading yourself so thin across multiple markets, again, personal opinion, you do what you think is best, but really going, I'm all in on that market. I want to see what that market, how that behaves, the opening range on that market, what's the typical daily range on it, the time of day it tends to turn, the rotation width, the distance between highs and lows, how it, these little nuances that you can't pick up when you're kind of watching so much stuff. Just I think that's everything else. Rob Ribeiro, if I butchered your name, pal. Do you offer trading courses for traders? You explain things in an easy way. Knowledge is key. Rob, do you know this? I've got loads of honestly. Check out that. I feel like I'm shilling these webinars. I promise you, I'm not, but they're free. I've got lots of stuff with these webinars. There's lots of stuff on the Pepperstone YouTube channel. I do have a community, Traders Mastermind Premium. It's closed at the moment because we have a group of traders in there, and we're really trying to build those guys up and we've got these trading pods coming up that we're sorting out, and there are some courses and material in that dashboard. It is closed at the moment, sadly, but you start with the webinars, have a little look, and hopefully some of that stuff adds some value. But I appreciate that. Thank you for your kind words. I'm glad that you think that there's some stuff there that's of value. And you know what? If when we open it back up again, if you're on the email list, I'll send you an email and you can decide whether it's for you or you want to carry on with some of the free bits. Anthony says, I would like to know, because I have issue with psychology, especially when I missed or get stopped out of a trade. I would not trade again for a long time because of the problem of losing money. Again, what do you think I can do? Decrease your position size, Anthony. Again, not advice specific to you, but generally speaking, if it causes you a problem when you get stopped out of a trade, decrease the position size. If you miss a trade, then being comfortable with saying there's plentiful opportunities, it doesn't matter. I would rather you missed out of 10 good trades, miss half of them and get half of them, than take 20 absolutely awful trades and get 10 good ones, because it's not going to work out. So say to yourself, hey, listen, it's okay missing the trades. Now, I don't want to go down this rabbit hole too much, but there's a question to say, have you missed it because and this isn't directed at you, but just being frank, is it sloppiness on your behalf, i.e. you haven't set an alert, you're not at the screen, you've just done it and you could have controlled it. Now, if you're at work, if you happen to have a job, you have other commitments, and you weren't able to take the trade because of that, that's fine. You couldn't control that. But is it sloppiness, as in you weren't prepared, you weren't ready, you hadn't set an alert? Or is it that you hesitated when you saw the trade? Now, different things require different solutions there. If it's that you hesitated, then a way of doing that is to say, well, am I absolutely crystal clear on my trading methodology? Do I take a breakout? Do I take a pullback? What level? And having more clarity on the decision. Because many traders, and I'm not saying this is you, Anthony, but many traders say, hey, I missed the trade. I'm really frustrated. I should have taken the trade. Yeah, but if you haven't got a plan to take that, you can't beat yourself up. You might look in hindsight and retrospect and go, I should have taken that. Why didn't I take that? And beat yourself up. But then if you look at your plan doesn't say take the trade on the breakout. It says, try and get on strength or something. So really then fine tune your plan to say, hey, example, opening range forms, I take a breakout to the high side of the opening range. 15-minute opening range, take a break to the high side, I buy on the first print above the. That's clarity. Now, if you don't take the trade, then it's a psychological problem that you need to address and be comfortable with the risk, all that other stuff. But that then allows you to say, I should have taken it. There's no ambiguity there. It's where traders struggle is when there's ambiguity. It's like, I should have taken it, I shouldn't have. But if it's not in your rules, you can't beat yourself up for it. So first step is make sure that you're on point with your analysis, your alerts, making sure you're able to take the trade physically. So that sort of stuff. And the second thing is making sure the trade is in your playbook and your plan. And then after that, it becomes a psychological game of, okay, I should have taken it, I didn't, why? Dial down the size, Get used to it. Reps, 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 reps. Last webinar I talked about replaying the trade, replay the trade, replay, replay, visualize the trade. Get to the point where you're comfortable taking the trade. And you know what? The final thing on this is you say, it doesn't matter if it's a loser. It's part of the game. Like, I expect it to lose. I have a thin edge here, and that edge is going to be X amount of losers over the 100 trades. If I get 40 losers over 100 trades and 60 winners, and they're 2-1, that's a huge edge. So this could be a loser. I need to be comfortable with that. I'm just doing some of that kind of work mentally for you. Last question, Mark. Would you ever share your risk strategies? No, proper risk strategies. I share everything, Alana. Honestly, I share everything. I'm not sure what you mean by risk strategies, i.e. trading strategies I'll share with you, ways to approach risk management, share with you. Because, you know, we said at the beginning, I think that the playbook is very personal, and there's no secret in trading. Someone might have a secret methodology, but it isn't really secret. Arta says, I'm currently trading on a 1 hour time frame. However, I'm finding it difficult to hold overnight over a few days. How do I build the confidence belief to hold longer? Thanks for your webinars. Appreciate that. Okay, last question here. Arta, here's how you do this. Again, my perspective on things. Always adding this little caveat because I'm not telling you this is a prescription, you must do this. But a way of getting over this, and I've seen this work before, is to hold overnight in a few days. You hold a very, very small position, the very smallest position that you possibly can. And you say to yourself, hey, my job is not to make money. I have the risk done. I've taken a chunk out of the market. I've cash flowed the trade. It's gone from here to here. I've taken 90% of the position off. My job now is just to leave it and just get used to holding a very, very small position. Right? Again, plan the trade out. Say if it closes in the highs, the upper 10% of the range today, I'm going to hold it for 3 days. I'm going to hold it till either get stopped on my target or whatever it is. Be crystal clear on what your approach is. And then when it comes up, you just have that very small position, and it becomes less about the money. It becomes less about the P&L. It more becomes about seasoning yourself and getting a new high watermark and benchmark for how you can hold trades and how you can be comfortable holding positions. And then gradually you start to increase that size a little bit, so that you can actually gain the value of holding the trades. You almost prove to yourself that you can do it. You prove to yourself that it's effective, and you go, okay, well, how can I size this up to a level I'm comfortable with? But start small with the objective of not the P&L, but of holding the trade as much as you possibly can. Okay, I think I've got everybody there. Oh, I missed one here. I think I've got everything. Okay, we'll call it a day there. If you want to ask me a question that I've missed, there's quite a few here that I'm kind of skipping over. I think I've got everybody. I try my very best to. But if you want to ask me a question, if you reply to my daily email that and put FAO to me, Armin will send that to me, and I'll do my very best to reply. In fact, I will reply. I don't think there's anyone I've not replied to, unless it's something meh. You know, something super simple. But you guys are asking great questions as always, and I appreciate that. So back next week. Do join me next week when we talk about the trader's reset system, and we'll take things up another level. Get your risk managed, ladies and gents. Thank you so much for joining me. Appreciate all your feedback and questions. I'll see you again. Take care. Bye-bye.